Good morning again, everybody, and I guess thanks for staying with me. I get to do a double duty here today, which is great. I'm not quite the I can't think of the name, Eric. The game show host that Eric is. It's always tough to follow Eric, but I'm honored today to get to moderate a discussion with three outstanding leaders from across the global insurance landscape. Like I mentioned, Halina Hagen of Manulife, Behnke of Pac Life, and Don Miller of Lloyd's. Their backgrounds span life, property and casualty, international markets, and literally everything in between. And together they offer a powerful cross-section of executive perspectives of where our industry is headed. So we're lucky enough to have two Dons up here today, so I hope that's okay if I refer to one of you as, or Don Behnke as Don B and Don M. I hope that's okay, just to help keep things clear. So this morning's panel will explore some of the most important forces shaping our future, from artificial intelligence to the demographic shifts to climate resiliency, cyber threats, and investment risk. These topics are more than just buzzwords. They're areas of real transformation and risk and opportunity. And while we have plenty discussed on stage, certainly encourage audience participation through the use of the Slido app. I'm not going to be as aggressive on the phones as Eric was, so please bring your phone out, you can use it, and we'll get the questions up here to take a look at. So as we say, there's really nothing off limits in the C-suite. These leaders are not only guiding their companies through today's challenges, but also anticipating tomorrow's headlines, whether regulatory, geopolitical, technical, or societal. So with that, we'll jump right in if that's okay. The first question is to everybody, so we'll kind of go down the line here. If you have your crystal ball, now would be a great time to pull it out. So we're not even 6 months into 2025, and I think we can all agree it's been pretty eventful. Even maybe some curveballs have been thrown in there from time to time. Our theme this year at the NAIC is strategic roadmap is securing tomorrow, with a focus on sustainable growth, preparedness, adaptability, and global leadership. So I guess the question for you all is, looking ahead, what do you think the biggest challenges or opportunity for the insurance industry will be in 2026? So I hope you brought your crystal ball, and go ahead.
Great. Okay, thank you, and thank you very much for the kind introduction and being here today. It's such an honor, actually. I was looking at the energy in the room before, and you can tell you as a community just love the exchange and the collaboration, which is, I think, what will, when we look at this year that we're in now and presumably the years ahead, where there is so much complexity around us, geopolitical, as we know, economic, social, all types of topics, then surrounded by weather and climate change, which is affecting the communities around us in many ways. That need to collaborate, to share data, to innovate together has never been more important. So for us in our marketplace, what we try to do is stay on top of where those participants in our market, those underwriting organizations as managing agents, what's top of mind for them. What are their ORSAs saying every day? And while for most of them, 95% is geopolitical risk and the interconnectivity of what's happening around the world, how that goes across class, across geographies, of course, but then what's coming down the line? What's coming down the line with AI and the risks that's facing, as well as the efficiencies it brings. Forever chemicals as a topic, health issues, not losing sight of those things that are a little farther away, but then also making sure that we're being astute and aware on the data that we're bringing together so we can assess today's issues. So I think it sounds pretty basic, but at the same time, forums like this are so incredibly important to allow that collaboration and sharing.
Thank you.
Yeah, also thank you for the opportunity to be here and to talk about all of these really big issues and opportunities that are before us. I agree with Dawn. There's a plethora of issues out there, and they are both opportunities and they are challenges. I'll focus on one that I think is really impactful for the industry today and into 2026, and that is AI. And whether it is artificial intelligence, generative AI, agentic AI, that technology is moving so quickly, and we as an industry need to attract the right talent to understand it and understand how to apply it to our industry. And we also need to be on the forefront of how is it regulated, and how do we think about the regulation? What should we be thinking about, and what should others who hopefully will develop regulation, how are they going to be positioned for it? Because it will impact our industry a lot. It's impacting consumers today, and consumers buy our products, use our products, interact with them, financial advisors, financial professionals sell them. So we need to have a position on how we are utilizing it for the good of our industry, for the good of consumers, and I think that's one of the biggest opportunities, and it's a big challenge for us going into next year.
Halina?
Similarly, I welcome everyone. I'm really pleased and honored to be here and look forward to the conversations today and tomorrow. So when I reflect on the world today with macroeconomic uncertainties, geopolitical uncertainties, transformation of technology that we mentioned, changing customer preferences, and also the evolution of their own anxieties, the opportunity and challenge that comes to my mind is the word proving resilience. And resilience has many dimensions here. It's financial resilience and non-financial resilience. Why is it important for us, both as an opportunity, as a challenge? It's because our business is based on confidence, is based on trust, and especially in those times of substantial uncertainty and volatility, the ability of us to deliver and to cope is tested over and over and through different aspects. So from my perspective, when I look at financial side, the ability to cope with market uncertainties, but also to deliver on innovations, we engage in different pursuit of different assets, asset intensive for insurance and similar, like just to make sure that also in smaller risks, we deliver, there are no hiccups, non-financial, the transformation of technology, that we stay on top on our governance. So to me, again, it presents the challenge in the uncertainty, but also a huge opportunity for us individually as firms and collectively as the industry to say we are here for you, and we help you to be resilient. So there is an important aspect of resilience for customers as well. I think that's going to be the theme in this environment.
Great. I do appreciate that. A lot of these challenges were certainly opportunities, right? And so it's there's a lot of opportunity within the market, I think, looking forward, and we get caught up, I think, at times looking at staying a little bit narrow and looking at the challenges we're facing in the world right now. I think there's a lot of uncertainty, as you mentioned. But I'm going to stay with you, Halina, a little bit. So you're the Chief Risk Officer of Manulife, so you get a very broad view of the organization and also the broader market. Continuing on with that uncertainty that you were mentioning, what trends are really standing out for you in the life sector right now, and how are they influencing your investment strategy and appropriate risk?
So I would say, as insurers, we are liability-driven investors. So our investment strategies reflect the nature of our liabilities. So as such, even in this period of uncertainty, I think staying the course to the fundamentals of our business, focusing on the matching of assets and liabilities, delivering predictable returns, very important. Of course, at the same time, we recognize the fact that the interest rates are higher, relatively speaking, then it reshuffles to some extent the asset mix, but again, it's more on the periphery, I would say. Fundamentally, we do stay the course, focusing on the economics of our business. By the same token, I think in this world of uncertainty, talking about like risk appetite, the key risk mitigant is that of diversification, and it's diversification by product, by distribution channels, by geography. So this is an important risk mitigation tool. And another tool that's again hugely important, and when you talk about risk appetite, is ongoing stress testing, like being vigilant and thinking the unthinkable. I find it interesting that in my years of experience on the insurance side, we usually assume, what happens if markets go down, interest rates change, credit spreads widen or narrow, etc. And we mastered answers to those questions, and we engaged in actions to align the results with our risk appetite. But now, like a lot of traditional scenario testing is challenged by what we see in the world. So the ability to think through like those new linkages or challenge our conventional thinking of what was true 2 years ago, what was considered a safe haven, what's safe haven today, what will be in a year from now, and how we need to respond accordingly to determine what actions need to be taken, and be very creative about this ongoing vigilance and stress testing, and throw out our priors established, I have it under control. Yes, to a large extent we do, but again, the unthinkable may happen, and be ready to address it first. I say in our heads. This is where a lot of things happen when we see clearly where we need to go and take actions accordingly to deliver on this resilience agenda that I mentioned is very important.
Yeah, I think the one thing that the insurance industry traditionally does a fantastic job of is rating that risk, right? And making sure we're turning that lens inside as well to look at our own risks and look at where we're at. And I'm not sure I want to get in the head of some of the risk managers all the time, because I'm sure some of the scenarios they're working through are probably pretty scary. But it's one thing that I've always encouraged. I think as the industry, we're one of the leading edges of finding those risks, right, or pointing out those risks and kind of the signal to the broader market of, hey, this is a problem. It doesn't mean we're not thinking about it internally as well. It doesn't mean it's not challenging. But I think your points are well taken, that we got to make sure we turn that lens inside as well, because we're also very good at rating the risk outside as well. So, Don B., building on that, as someone who's leading the life company that's always thinking about the long game, how are you balancing that desire to expand into new markets and offer new products while navigating what has become a really volatile environment?
Yeah, so we are very focused on growth at Pacific Life. Our purpose statement is to provide confidence for generations. And we believe that people really need our products. The economic environment shifts, the political environment changes, but the consumer need that our products fill persists over all of that. So the focus on growth is really a focus on expanding the impact for consumers and expanding the value for consumers. In our consumer markets business, we have a very diversified business. So we serve consumers across the economic spectrum, across the age spectrum. We have a full suite of life insurance and annuity products, and we serve those consumers and get them those products through a mix of distribution channels. And that diversity enables us to be strong through volatility and through markets, and be able to get the right products into the consumer's hands and the need, regardless of what economic environment that we are in. The foundation for that is a very strong risk framework, risk management process. And the way we integrate that is a combination of product design, has voices from our actuarial design and pricing staff. It has voices from distribution and consumers. It has the voice of risk management, capital management, investment management. And they all come together to ensure that the products that we are developing meet consumer needs and meet the needs of the company for the long-term stability and growth. Our focus is that confidence for generations. And so part of that confidence is making sure that we are here to keep the promises that those consumers take on in giving us and entrusting us with the needs that they have in the products that they purchase. So it's really that combination of all the voices in the room that are needed to provide that strong risk foundation underlying the products.
Great. Yeah, I think it's not only diversity of products and investments, but it's also, like you mentioned, diversity of voices with internal each company. And again, I've been in this role for 8 years and had a fantastic viewpoint of get to see a lot of these things. And I think the one thing that has continually impressed me is again, just the amount of discussion that happens internally as well. I think with regulators inside the company, somewhat to Halina's point, where there's a lot of scenario discussion. There's a lot of work that is done behind the scenes before products are put out, before investments are taken. And so that gives a regulator encouragement. Not to say that there aren't things we got to watch out for and continue to look at, but it is certainly encouraging to see the work that's being done. Don Miller, Don M., I'm going to shift to you a little bit. We're going to shift gears and talk a little bit about resiliency. We've already touched on it a little bit in some of the opening. But Lloyd's has spent the past decade building partnerships with nonprofits, with cities, governments, to tackle disaster risk and close those protection gaps, particularly in emerging markets. And so we're going to continue to hear more about that throughout the day. But would you share how Lloyd's is helping educate policyholders about that risk? I think it's something that I think every regulator in the room, every company in the room is certainly trying to crack that code, is how do we get consumers to understand their risk? And then also if you want to touch on how regulators fit into that conversation.
Absolutely, that was great, thank you. And it definitely feeds, I like how the question set is coming down, it all feeds together. And from our perspective, whether you're speaking about emerging markets and partnerships with multilateral institutions to bring risk to the forefront in those communities, or in more developed marketplaces such as the United States, this is an incredible moment for our industry to band together, to bring that collaboration that we're having internally around resiliency, around how do we price risk, and take that education on the road, so to speak. Helping the end consumer, whether they're corporate or individual, it doesn't matter either way, understand how pricing mechanisms work. Maybe not putting all the math out there on the evening news, but having a correlation between the risk that's being taken and there is capital behind that, and someone choosing to put capital behind one risk versus another, and the reasons for that, and in that backing in the resiliency point. When we see communities, when we see buildings, when we see businesses rebuilt in areas that we know are going to cause future problems, or challenges because of where they sit in the world or other cat zone issues, if you're rebuilding those spaces and not deploying new resiliency efforts, we're not leading to an educated consumer. And oftentimes the way that our marketplace is oriented, which is fine, our marketplace is so incredibly powerful for it because of the vast pervasiveness of our global market, all of us together, there are multiple voices in that chain between the individual or the corporation passing the risk and the ones taking it. And the education chain gets thinner, and it's one of our greatest concerns in our market globally, as respects our whole global market collectively, is that the voice of understanding what goes into taking that risk, and that choice is capital on the other end, whether it's alternative or traditional, doesn't matter, is making a choice to take that risk along with those underwriters, and if they don't feel that resiliency is being deployed or perhaps even incentivized in some way through public-private partnerships, they may not be able to deploy the capital to address those risks. And we see large protection gaps in so many emerging markets around the world. And certainly something, being a marketplace, as the corporation, we are very privileged to be able to partner with global institutions, multilateral institutions, as I mentioned, individual regulatory bodies, individual country governments, to help put programs together and raise that awareness. It's critically important. If we can't move the capital into some of these areas and create stronger wholesale markets, for lack of a better term, I'm not sure we can pull together the large pots of capital that are required to address some of these larger scale issues ahead of us.
Yeah, it's been a fascinating shift in the discussion, right? I mean, I think we've seen it's been a little sleepy for time. I can think of my own home state, North Dakota. Our perils are pretty well known, and we understand that. But even we are having the conversation around building codes, around resiliency, and the fact that I may be able to mitigate my home, but if my community isn't resilient, does that do me any good? I know I keep staring at Commissioner Lara from California, and the wildfire risk that's not only faced in California but across the country. It is going to take an all of the above discussion, and so really encouraged by the work that Lloyd's is doing and trying to drive that conversation forward, because I think it's one area that we're missing is having a consumers, even local government, understand the implications of what resiliency and mitigation steps mean to their market.
If I could add into that, because you asked me about regulators as well, specifically, this is where I think regulators have a wonderful role to play, to do some work together in a sandbox environment or just in a test and learn opportunity to try it whether it's building resilience or community resilience of another type in one area, test and learn, and then educate out. Incredibly important to just try and prove that and educate to the consumer. And this is the same messaging I know that we all put out if we were speaking to a community of distributors as well. It's incredibly important for the health of our industry that everybody understands that correlation.
Where I'm finding the challenge is that next step is talking to the home builders, talking to the local governments, and that is an area that is we haven't, I don't think, quite cracked that code yet. I think I'm encouraged by some of the discussion that's coming out of Congress and some of these pieces about do we always pay for post-disaster recovery? Do we need to start putting money into pre-disaster mitigation, strengthen Alabama homes?
Those could be interesting experiments.
You look at all these pieces, right? So there is some state structures that we're beginning to develop that can encourage that mitigation, and any other kind of federal dollar support or congressional support would be helpful in turning that tide. But it ultimately comes down to the consumer's got to make the choice, and the local government's got to make the choice to invest in that resiliency. And I think that's going to take everybody in the industry to help have that conversation. So.
Yep.
Let's shift into some of the demographic changes. So I'm going to shift to Don B here for a minute. So you lead the Consumer Markets Division. You're on the front lines of how these demographic changes are shaping our insurance needs. What are you seeing in terms of the U.S. population trends, and how do you expect the industry to respond?
Yeah, I think the demographic trends in the U.S. are absolutely in our favor. And you can see that across the spectrum. So if you look at any of the data and information coming out of ACLI, other organizations, 4 million Americans turning 65 each year between now and 2027, and then it doesn't fall off a cliff, and the people that are turning 65 are living in retirement. So their huge need is for sustainable lifetime income. And how do they work and navigate having no longer that traditional paycheck coming in, but how do they turn the assets that they've accumulated into a steady payment stream and income stream? So I think that demographic is definitely in our favor. And then you look at, in that age group, the amount of wealth transfer that is happening across generations. 124 trillion estimated to transition generations between now and 2048. And so how that wealth is transitioned from one generation to the next, how the financial professionals engage with that next generation and able to provide them advice on how to best take advantage of and use the wealth that is transferred, critically important, but also a good tailwind for our business. And then you look at millennials and coming into the accumulation phase of their work life and accumulating for retirement and saving. And so there's a number of demographic tailwinds for our industry across life insurance and annuity. And the persistent through all of that is protection if someone dies too early. That might be a breadwinner in a family, it might be a business owner trying to protect the business and make sure that the business is stable, should they pass prematurely. So the demographics, I think, are definitely in our favor. A couple of challenges that we have is getting our products to those people that need our products. And some of that has to do with how the products are sold. Can be still cumbersome to purchase our products. They are sold products, they're not purchased by and large, and so we need to continue to address that. We need to make sure that the financial advisors are able to have relevant conversations and make sure that across all those generations and understanding the real needs and desires of those generations, they may need the product, but how do they understand how to acquire it and understand the need for it and understand the value that it can provide. Financial professionals play a huge role in that. So us being able to make the products relevant in a way that we embrace technology for both the consumers and the advisors, I think is critical to taking advantage of the demographics that are before us. So
when you say you've got tailwinds or opportunities there, with all the 4 million people turning 65 every year, I'm assuming that means that that's a target market, right? I mean, that's an area that we can address, and certainly is one area I think that we see as a potential protection gap, where you've got a number of folks heading into retirement that maybe don't have the financial security that we'd hope they'd have, and so I think I would agree with you on that front. That's a challenge to get that in their hands, all right, and to get them to take that step. It's certainly challenging to do it earlier in life, and then as it gets to be later in life, it almost becomes much more of a challenge as well, because it's much more costly at that point. And so, again, continue to crack that code on how to communicate to consumers. I think we're all working on that. So.
And I would add that it's insightful to look at international experience and trends in this respect. We operate in a number of markets in Asia that are actually older than the US. Like, I think the median age US is 39, Japan is 50, Hong Kong is 47, and the aging proceeds even more rapidly, relatively speaking, in those older societies. So we definitely have witnessed a shift shift away from the traditional income protection towards more the distribution of retirement income, greater interest in whole life, much more focus on the legacy issues and the transfer of wealth, the well-being of children and even grandchildren in the context of Asian countries. So I think we as insurers have a huge role to play there because traditionally we've been in this business, and I think there is also a strong alignment of interests with asset managers, our asset management capabilities that are going to serve the population well in this respect. But there is also another aspect to it at which we are good, namely all the biometric risks and managing health. Again, in a number of Asian markets, we see a growing interest in medical reimbursements, but also critical illness, protection against critical illness. And here the regulators, again, have a huge role to play to help to educate because like what's the essence of critical illness? You get fatally sick and you need medical support and income protection, but you see the definition of this changes with the technology advancements and also the earlier detection. So commercially speaking, the interests of insurance companies is make sure that we price properly for the flexibility. If the definition is too broad, the consumer may not need all this flexibility and yet has to pay for it if it is in place. So again, the role of education, both by the industry and the regulators in addressing like the true fear, the true risk, as opposed to, you may be what was a critical illness 20 years ago no longer is today. So the products have to be reflect those changes in outcomes. I would also say that at John Hancock, especially here in US, it's our leading business in promoting what we call vitality, living not only longer lives, but also healthier and happier lives. So I think as insurance industry, we also have a huge role to play in providing as part of our offerings early detection, promoting healthier lifestyles through our premier design for how we support the customers on their journey. So in addition to a very important aspect of financial risks, living longer and aging population, there is also this aspect of living healthier where the insurance are well equipped to promote it as well.
Yeah, and I think we've seen some steps taken in that space, especially around the use of biometric tools. I think you mentioned, like I said, I've been in this role for about 8 years. I'm becoming one of the old guys now around here. We modernized our rebating laws in the NAIC and in North Dakota as well to offer some of those, try to help incentivize some of those pieces where, again, if we can mitigate that risk, if you can live a longer, healthier lifestyle, that's good for the consumer, good for the company, good for everybody. Yeah. We're also working on, I think your points are well taken on the complexity of the products, right? I think the insurance industry has a fantastic story to tell and is a very noble industry and provides a lot of protection across the world. We don't tell our story very well at times. And so I'm looking at Director French, who's the chair of our A committee, and some of the life illustrations that they're trying to work on and trying to clarify, get a little more clarity to what these products actually mean to consumers to hopefully incentivize them to buy them. As you mentioned, they're sold, so there's got to be an active participant in that. And so we're certainly open to continue that process of how to simplify this buying process as much as we possibly can because it is so critically important to our consumers. But I'm going to shift. We're having a great conversation, and The biometric tools shift us into a little bit of the technology discussion and artificial. It's one of my favorite topics. So Don M, I'm gonna start with you. One thing that we've heard a lot about recently is the pace of technological change, right? Especially around artificial intelligence. It was mentioned in the opening comments, mentioned by the opening of the panel. I know Lloyd's has done some really impressive work through the Lab Accelerator and the innovation initiatives. How are you integrating emerging technologies into your operations and your strategy?
Yeah, sure, great. So that's, again, my favorite topic as well. So I'll cover this in two ways. One, I'll talk about our Lloyd's Lab and innovation at Lloyd's is one topic, and then I'll speak a little bit about, and it might conflict with something we speak about later, but I'll bring it up now about how we're using AI at Lloyd's. So I'll do the two. Lloyd's Lab is an insurtech accelerator. We started about 6 years ago, and it actually is one of a multitude of an ecosystem of innovation. I would call them facilitation promotion programs that we have at Lloyd's, but it's certainly the one that is most well known. The accelerator, as I said, was started 6 years ago, inviting applicants in twice a year to spend 10 weeks and experience the Lloyd's marketplace. When you think about there are 50,000 people that sit in the square mile in the city of London operating in the insurance space that are passing through our building every day. You think about the 100 underwriting organizations we have, 50 managing agents, hundreds of brokers and agents, all of that. It creates a wonderful experience and environment for entrepreneurs to come in and test their products, hone their products, and when they leave, then move on down the pathway of becoming a risk-taking organization or a service provider to the industry, because they have the capacity providers right there with them. And we create those pathways, whether it's through certain class codes, an accelerated delegated process, or helping them set up syndicates themselves. Some that have been referenced through some conversations actually came out of Lloyd's Lab. Now, as we've moved forward, we have partnerships with many organizations around the world where we work together. We have partnerships in the UAE. We have partnerships with the Bermuda Monetary Authority. We're setting up some in Singapore as well to help push some of that design thinking that we have in our accelerator out in the broader industry. And most importantly with that, while the accelerator brings some incredible products to bear, Fora, I think many of us heard of during the Palisades fire. We've got Sola, who has been with this community before as well. Just 2 of 160 names of those companies that have gone through our accelerators. 95% of the companies that have gone through were still in the insurance marketplace, and that's a huge testament to the power of the machine that sits behind it just by having an access to our market. But at the end of the day, innovation is very hard. It is very scary. And as much as we like to say the words fail fast, succeed faster, it sounds really cool, it's very, very hard to do. So a big focus, while we have the accelerator, what's more important to us almost around that is the ecosystem of learning around that. And how can you help the insurance community, those that are creating product, those that are distributing product and consuming product, understand how to innovate, how to think differently, how to look at different risk scenarios, and not be afraid to fail in creating a new product, because there's always some learning, and I think there's a beautiful space for the regulatory community in there as well to co-create together. I also mentioned how is Lloyd's using technology. So it is a challenge. We are 330 something years old, right? We have a lot of rules that we are every day peeling away. We're breaking up every single one of the rule books we have, which is wonderful and a lot of fun, actually. Changing how we're approaching oversight, moving from rules-based to principles-based, which is bringing up the performance and quality of the marketplace in a very, very effective manner. So deploying technology is often maybe not our best skill at times. So while we're working on our insides in terms of trying to make an easier flow of information, we have been using AI in 3 very distinct ways, which is kind of neat. I know we'll talk about the risks of AI later, but we have using it to work through our goals, all the goals set for the employees, to understand have those goals been set in a smart way? Could they be more detailed? What are some of the themes coming out of them? And then pushing that information back out to the managers in a live dashboard so they can make sure that they are working hard to performance manage their teams in a way that's clear to those individuals. So it's kind of a neat way we've been using AI. We're building a chatbot that helps with all those questions that come in. You guys have been doing this a long time. We have not. So that chatbot of, are you Lloyd's Bank? Or tell me about our licensing framework in a particular country around the world. And we're going to do that to capture all of in addition, our regulatory queries, et cetera, those baselines. So those are kind of 2 ways. And obviously there's some claims work being done. But those are kind of 2 very creative ways we're trying to test and learn and use technology and AI in particular in a different way that's not so scary. So we're trying to learn from ourselves too.
Great. I think so AI is going to be a theme that we talk about throughout this conference, but I do want to focus on taking a little bit of a step back and hear some of the optimism, or hear some of the, what do you think, and this is for everybody on the panel, where do you think the biggest long-term impact for artificial intelligence can be? So in 10 years, what roles do you think AI will be enhancing or replacing, I guess, for your businesses? So whoever wants to start with that, I'll open up to everybody.
Yep. I can start. So I think it will, long-term, and it will probably happen before 10 years, but certainly over that time span, I think it is going to really supplement the roles of people dealing with a lot of data, complex decision-making, looking at a lot of trends in data, nuances of data that humans may miss today, or just do not have the capacity to bring in all the data. So those types of roles, I think AI will supplement. And I think to help them and to make that happen, we have to have the right deep technology skills, the right data skills, the right data science skills to really make that all happen. Because as insurers, the duration of time that we've been around, we've been only 160 years compared to your 300 plus. But we have a lot of data in old systems, and it doesn't all easily come together. So I think the workforce that we need in order to make that data accessible and clean, to make those decisions, is critical. The roles that I think it will supplant are really the high volume, very routine tasks that take a lot of time today, and as a customer, they wouldn't know that that's adding value to them or that's there. So when it supplants those roles, I think part of our responsibility is understanding that, and understanding that the people who do those roles today are the people that enabled our success and got us to the point where we are. And so how do we help them relearn, reskill, retrain into the newer jobs that we are going to need over the course of these 10 years as we embrace this new technology?
So I would like to expand on it. I'm also hugely fascinated by the topic. And in my view, what is happening is a revolution, not an evolution. And it's, to me, a classical example when it's easier to see risks of action, but there are as big risks of inaction. Like the question should be, what if we don't get on with it? Like, we'll be left behind by forces around us. The world is increasingly using it. The customer expectations are changing accordingly. So balancing the risk of not doing and doing, like recognizing it, hugely important. Another risk or aspect that's hugely important, because there is quite a bit of apprehension, if not anxiety, around it, is we have to get it right. We have to have strong governance, strong controls, because if there is a hiccup, it will set us back as a company, but also as an industry, because we'll be, oh, wait a moment, and in the meantime, the technology is speeding ahead. There is no wait a moment here. So balancing, like having strong structures and moving forward, super important. In addition to jobs that Dawn mentioned, I find I use AI as a super elevated research assistant. I can sort of summarize the recent IOPA paper, IAIS, compare how NAIC and AIS and OSFI, etc., look at this item, and it's boom, like in no time I get intelligently written brief on it. So I think it will also replace not only those manual tasks, but also research type tasks done by lawyers, tax experts, accountants. It's already happening. So another aspect that I wanted to mention, Petra has a question on agentic workforce. We also know that this technology has some aspects that are concerning, and I tend to attend all those lectures by professors who are in the technology, don't always understand the technical aspects of it, but hallucinations are real. Withholding truth, even like apparently is tested, may be real. So increasingly having AI, challenging AI, like building appropriate capabilities around it. For now, the way we approach it is human in the loop, but to be honest, to get it to scale, you need also to get a human out of the loop for certain tasks. So again, building infrastructure around it where AI will be able to check AI is very important. For insurance, I see it as pertinent to the core of our operations, starting with the sales needs for distribution leads. Like AI can do it, like who is likely to buy which products and do it very efficiently. We use it to support our agents this way. The underwriting decisions, like again, it can process huge volume of data very fast and mercilessly in a way, because we say it may make mistake. Well, human makes mistakes, so it also depends on the benchmarking here. Then the claim service. We use AI technology very efficiently to detect fraud. And when you have low persistencies with which agents, which cities, which channels, what is happening, like we can gain huge insights, plus, as Don mentioned, the customer service area. So I think it's redefining the industry. And it's important for us to also recognize that because the risks of mishap will hold us back, that actually addressing moral hazard issues, like through regulations, I would say, make sure that we all benefit and have a mechanism to benefit from best practices, risks that we recognize, that there will not be one firm that hits the headlines, which will taint the progress for the industry as a whole, is an important aspect here.
And I think building on that a little bit, I'd be curious to any insights any of you can offer is, the challenge I see is developing that trust between the consumer as well, right? I mean, I think we're doing a ton of work, even in my office in North Dakota. I mean, I've got a team who starting to soft touch use AI to review contracts, review some of these pieces to get that summary, right?
Yeah.
And I think it's scary at first, right? It's like, well, you're going to replace me. You're not, what? It's like, no, I want to use your brain for other things. Like I don't need you reading contracts 8 hours a day. I need you analyzing the differences. I need you to use critical thinking to do that. And so some of that is concerning, but I think when you apply that to the broader market, consumer trust in technology is really fickle. I think we will sign off on just about anything and then realize we signed off on it and then we're mad about it. And so how do you bridge that trust of the use of AI and the use of the technologies, which I do think are beneficial internally. I do think they can really help speed processes and do all the benefits of that. But then communicating that with the consumer, any thoughts on how do you communicate that with the outside world, that this is a trusted process, there's guardrails there's some of those pieces I'd love any insight you may have on that.
Yeah, I think from a consumer standpoint, where we start is making sure that we're not using AI today in the direct work with the customer. We have humans doing the discussions on the phone, meeting their needs, answering and talking to them. Where we use it to help our staff is pull in all the information on the products, whether it is in policy forms, marketing material, product specifications, across all our products, and surface it to them in a way that they can see it quickly and easily to give a better answer to a customer who has a question. So an example of this is each year we look at the life insurance policy that resulted in a claim, how long it had been on our books. And it is generally 80 plus years. Last year it had been on our books 87 years. So somebody calls in, they want to understand a little bit more about that policy, they want to understand how to process the claim. And the customer service rep needs to go back and look up and understand that product, which obviously is no longer sold. But the process for doing that, AI can help us to pull all of that information in relevantly, enable that customer service rep to answer that question more quickly, potentially more accurately in one call. So that's an example of where we use it today. The consumer sees benefit. There's also many projects where you can apply agentic AI. So agentic AI means there's an agent that you can name the agent. You could give them the name Dawn. You could give them any name and have them part of the process. And the challenge with that is teach them what process you want them to do. And again, I go back to the many routine transactional tasks that require getting all the data out of all the different systems that we have accumulated over the years that house that policy data. And how do they pull that together? Today, a human could sit down and potentially have to access 5 different systems, or more than 5 systems, in old technology, in screens that we're not teaching people how to use anymore. So going and pulling that data and surfacing it for the person who's servicing the customer, that's where we're at today.
It's interesting because both of those examples that you've given, Dawn, show how AI is creating an opportunity for more of the right product to get to the right place, right? To address protection gaps. And that's what really excites me about AI, is that ability for some of that, again, some of those tasks, that processing, to be moved out of the way so we can gain into broader marketplaces and push product where it should go. I think that's fascinating. And from that perspective, I stay very optimistic about it. But at the same time, I see that certainly from a commercial product perspective, it's important that we come together in an industry, and it's already happening, and really focus on what are the new risks that are coming off the back of that. It took us all a while to get to silent cyber, didn't it? Well, how about silent AI as we go? So and what's nice to see, we have a challenge program working right now in Lloyd's lab around this exact topic. We're not actually even sure what we're trying to look for, but we know we're looking for something because we see it already come through. Another thing, so that's a bit of a negative, but if we come together as an industry, back to your opening comments, Commissioner, I think it's a powerful place to be. Another area where I am very, very optimistic about AI is when you look at the perils, those peak perils, or however each of us in our organization call them, especially in the commercial space, what keep us up at night, the Nat Cat, we're very familiar with that. We understand tornadoes. We understand flood to some extent. We very much understand earthquake. We, as our collective, industry, we have so much data, fire, how fire spreads, all of that. But maybe a little bit less the new ones that are on our radar and starting to abut and become just as serious in terms of volume and amount of human and economic loss around severe convective storm, wildfire, those maybe there's less information out there on. So can you imagine harnessing that power of AI now to help us be able to do that modeling and get our global baselines and our ability to understand those perils up to the level that we have and predictability that we can see on the Nat Cat space? I think that's very, very powerful as well.
And to it, how do we get customer comfortable? I think there is an evolution through the usage of AI. So and the demographic shifts. Like I know from the experience of my children, like AI now designs all the itineraries when they travel these days, like sort of, and it's actually quite intelligent and quite good, I must say, and very efficient. So we invest also a lot in having our employees comfortable with the technology itself. So we rolled Chat MFC, we call it across. So in a more controlled environment, you get experience with writing prompts and getting answers and checking, etc. So to your point, it has to be through this lived-on experiences where the level of comfort in the society at large with this technology is rising.
Yeah, it's. I found myself in this role when I first came into the NAIC as the Innovation Technology Chair, kind of by happenstance. I think I raised my hand at the wrong time, and the predecessor, who was the chair of the committee, ended up retiring halfway through the year, and all of a sudden I'm the chair of this. But it's been a fascinating discussion to see this evolve over time, and we're just I think it's exponentially changing, right? And it's going to continue to evolve, and there are certainly some challenges we've got to deal with and walk through, and I think part of that is consumer trust and how we handle it as regulators and even understanding it. But I'm pretty bullish on AI. I'm pretty bullish on where we're at. And I think it's here to stay, and so the more we can adapt to it and the benefits that it can bring to not only the regulator community and what we get to do internally, but also our consumers. But I've got my lovely host standing ominously on the side. So we are going to wrap up here, but please join me in thanking a wonderful panel. It's been an honor to moderate you, and it's a very good discussion.